Hey everyone, welcome back to the channel, your number one source for income-oriented investing, how to generate passive income from a diversified portfolio of high-yield funds. And throughout the couple of years on this channel, you guys know that I'm not really a big fan of GICs. And I get the question all the time, Adrian, where can I park some cash? What are your top safety investments where I could put, store cash safely? Well, in case you haven't seen the videos, one of my top choices for more of a safety play, or a place where you could park your cash short term and get a decent yield, are split share fund preferred shares. So these are fairly complicated investments to understand. So what we'll do in this video is quickly review what split share funds are, but more importantly, the split share preferred shares. And why am I doing this? Well, it's because a brand new, really cool and smart ETF, I think, that Brompton just launched, it basically combines many split share funds, split share preferred shares rather, in Canada, all in one super convenient and cool ETF. So we're going to review the Brompton Split Core Preferred Share ETF, stock symbol SPLT. It's a brand new ETF. It just came out. So we will review what this ETF holds, what it's all about. But of course, we need to understand what split share fund preferred shares are. That's what I'll cover at the beginning of the video. So we'll go through all the advantages that these split share fund preferred shares have over regular preferred shares in Canada, for example, and GICs. Then at the end of the video, I'll give you my opinion on this ETF, for who it's designed for and how you should actually use it. So is this ETF now the best safety ETF out there in Canada? Let's find out together. Let's do a deep dive and check it out. So to understand what split share fund preferred shares are, we have to understand what a split share fund is, or a split corporation. So basically, these are closed-end funds compared to ETFs, for example, which are open-ended funds. They're listed on the exchange, on the Canadian stock market. You have their own stock symbol. Where it's different is it's called a split share because you have your portfolio of stocks, and then there's actually two classes of shares, each with their own separate stock symbol. Right, so the preferred shares are always going to have typically a PR in the name. That's how you could differentiate them from the Class A shares or the capital shares. So visualize a portfolio of stocks, let's say the big 6 Canadian banks. And basically what happens, they do a split, and you're going to have the preferred shares, which are the more conservative investment, and then you have the Class A shares, which are a more riskier investment or a leveraged investment in the big 6 Canadian banks. Why is that? Well, the preferred shares, just like regular preferred shares on the stock market, you have, for example, you have Enbridge stock or Bell stock, and then there's Bell preferred shares or Enbridge preferred shares. So the preferred shares are more conservative. They have first crack at the dividends of the portfolio. So think of the big 6 Canadian banks. So the preferred shares will have the priority to get the dividends, and that's how that 5 or 6% yield typically that the preferred shares give is sustained. It's from the eligible dividends of the portfolio. So basically they have more downside protection because a lot of, or the stock price movements of the portfolio in normal market circumstances, that pretty much goes to the Class A shares, and not much of it will go to the preferred shares in normal market circumstances. So just like preferred shares in general, right, they have a shield, or they're a little bit more protected, whereas the Class A shares really captures most of the ups and downs of the portfolio. So think of it like a safer way or a more conservative way to invest in the big 6 Canadian banks, right? So if you're going to get the preferred shares of a split corporation that invests in the big 6 Canadian banks, it's more conservative than investing directly in the big 6 Canadian banks. And just like a preferred share, they have a fixed coupon. So typically the duration is 5 years. For most split share funds, it's 5 years, which means the preferred shares for 5 years get a set amount of dividend or interest rate, right? Typically it's between 5 and 6.5%. And what happens is at the end of the 5 years, which is called the maturity date, just like regular preferred shares, preferred shareholders actually have the option of handing back in the shares for their original price, which is typically always about $10 a share. So in short, preferred shares of a split corporation, it's still investing in a portfolio of stocks, except it has more downside protection. It has a lot less volatility than the Class A shares or the capital shares, making it pretty much a more conservative investment in a basket of stocks that you like. And another thing to remember is it does have, just like regular preferred shares, a maturity date where you actually have the option to hand back in your shares at the original price. So if you're confused, let's look at an example real quick so we could put this information together. And trust me, it's not as complicated as it might sound. So as usual in investing, the best way to really put the information together and understand what we're talking about is looking at an example. So I will look at the Brompton Split Bancorp, a very popular split share fund on the Canadian market that actually invests in the big six Canadian banks primarily. So like I mentioned, there's two classes of shares. Here they are, SBC. These are going to be the Class A shares. SBC is actually the stock symbol. So when you look up SBC on the Canadian market, that refers to the Class A shares, but we're more interested in this video about the preferred shares. And like I mentioned, there's always typically going to be a PR, which stands for preferred, in the stock symbol of the preferred shares of SPC. So SPC, Class A shares, SPC.PR.A is the stock symbol for the preferred shares. So as you could see here, like I said, these are closed-end funds, which means there's a, and even ETFs have this, there's a net asset value. This is the intrinsic value per share of the fund. And then there's a stock price or the market price, which is, what is it trading for? So when it comes to SBC.PR.A, you can see here that the current NAV is $10.01. So typically the net asset value in normal market circumstances should hover or will hover near the $10 NAV mark, but the stock price can fluctuate a little bit. It can disconnect a little bit. So the stock price can disconnect a little bit from the NAV value. So in this example, this split share fund preferred shares are trading at discounts because you could pretty much buy them at $9.62 on the open market right now. This, of course, is as of this date, but the intrinsic value is $10. So if you're buying them at $9.62, they're worth $10. You're actually buying them at a discount. And this is what really makes closed-end funds, split share funds special and more unique. It's because the net asset value could sometimes disconnect from the stock price. So this is, a preferred share of SBC. If you look at the portfolio of stocks, it is pretty much mostly the big six Canadian banks. So that's why I gave that as an example. And remember the maturity date I was talking about. And by the way, right now you're getting a yield of about 6.5%. On the preferred shares. And if you want to, by the way, click on the Class A shares, you'll get the information on the Class A shares, right? Because there are two separate classes of shares. So you see the NAV of the Class A shares are $8 and the NAV or the net asset value of the preferred shares are 10. And the unit NAV is simply the two NAVs put together. 801 plus 1001 equals 1802. Unit is the preferred shares and the Class A shares together. As a unit, what is their value? So if we scroll down, you click on overview, you will actually see the maturity date here, November 29th, 2027. So like I told you, the preferred shares or split share funds typically have 5-year maturity dates, which means a little bit before, on November 29th, 2027, the preferred shareholders will have the option to give back their shares at the original price, which is typically $10. So here is an example. And if we just look at the stock chart, remember I was telling you that preferred shares are a more conservative investment compared to the Class A shares in a portfolio of stock. That translates to much less volatility and more stability with the stock price. And the proof is in the pudding. Let's look at the Brompton Split Bancorp preferred. Always got to make sure it's preferred here. You see the stock symbol, again, PR.A, SBC PR.A. Don't look at SBC because that's going to be the Class A shares. The last 10 years, here's the stock chart. You'll see that it's very, very stable, hovering always more or less near the $10 mark. And you see this little dip to 850 or 840. That's because of the COVID crash. But you'll see it went back up very quickly after that. So in normal market circumstances, this is what I was saying before, the preferred shares typically hover near the $10 mark. But it's not always the case. As you see now, it's at about $9.62. And like it says here, but just because it's trading for 962, the actual value is $10, 10.01. So right now this one is actually trading at a discount. And if you buy it right now at 962, not only are you buying it at a discount, but you're also getting a very nice 6.5% yield, right? If we look at another example, LBS, which is another one from Brompton. Again, these are the preferred shares because you have the PR in here. Look at the last 10 years, very, very similar. It's a similar basket of stocks, by the way, Canadian financials. And you see, very much the same thing or close to it, very stable in normal market circumstances. The price is always going to hover near $10. So these are very similar to regular preferred shares. I know I keep saying that, but they have more downside protection, less volatility than the Class A shares with a fixed coupon amount. Typically with preferred shares, it's 5 years. And at the end of the termination, you could actually hand back in your shares if you so choose at the original price. So in case you're still a bit confused what a split share fund is, Brompton has a nice little document here explaining what split share funds are. Quadravest, another big split share fund provider in Canada, also has a nice document. And then you have Middlefield document, which also explains it here. I will put links to all three of these in the video description below in case you want to read up on the documentation here to learn what is a split share fund again. And a lot of what you read should now make sense to you because of the explanation. So hopefully now you have a good understanding of what split share fund is, the preferred shares, especially compared to the Class A shares. Now that we know this, let's check out what this new ETF is all about, because it's basically, think of it like an all-in-one split share fund preferred solution. So let's check it out because it's very interesting. So I would say there's three major advantages. Let's start with GICs, okay? So preferred shares, split fund preferreds versus GICs. Three humongous advantages. First of all, you're going to have a higher yield, typically a slightly higher yield than GICs. Second advantage is, this is a huge one, tax efficient income. Most of the distributions or the yield that you actually get is mostly eligible dividends, whereas GICs is just regular interest income. So it's taxed much, much worse. And I'll give you an example. So this is the Ontario tax brackets here. So let's just say you're in the tax bracket between $54,000 and $86,000. If you have a GIC and you're getting paid interest and it's not in the TFSA, let's say it's just on a regular non-registered account, this is the tax rate you're going to pay on the interest income from the GIC. So not only are you getting less income, you're going to be getting more tax, because look at the tax rate with eligible dividends. It's 6.39% versus almost 30%. So there's a humongous difference. And you could see no matter what tax bracket you're in, eligible dividend is always going to be better than interest income or regular income. And by the way, if you're actually making under, 53,359, you're paying there's a negative tax. You're actually paying no tax at all on eligible dividends in that tax bracket. Of course, the higher tax bracket you go, the tax becomes higher, but eligible dividends will always, always, always beat interest income. That's humongous. And the third and another big advantage is it's not locked. You could buy and sell preferred shares of a split fund whenever you want on a regular exchange, whereas GIC is locked in for 3 years or 5 years, whatever it is. And if you want to get out, you're going to have to probably pay big penalties, right? So that's three massive, massive advantages that preferred shares, split fund preferred shares have over GICs. And they're also much better than, the regular preferred shares like a ETF like CBD, because look at this ETF, it's actually gone down. It has not only less yield, yes, the yield is tax efficient because CPD does give mostly eligible dividends as well, but your capital is much more at risk, in my opinion, here with this ETF versus a split share fund preferred. And it's not like you could hand back in your CPD ETF after 5 years for the original price that you bought it for. So it doesn't have that retraction or where you could hand back in your shares after 5 years. So it has advantages over GICs and traditional Canadian preferred shares, that's for sure. Now let's finally review the Brompton SPLT ETF, which is an amazing way of actually getting access to all the split share fund preferred shares in Canada with one ETF. All right, everyone, it's finally time to review the Brompton Split Core Preferred Share ETF, stock symbol SPLT. This is an actively managed fund. You could see that the current distribution rate or yield is a little over 6%. So first thing we always want to do when we invest in an ETF or any fund for that matter is look what's inside. That's what you're really investing in. So here is the breakdown. If you just click on portfolio, here's the breakdown. So this is basically an ETF that holds several split share fund preferred shares on the Canadian market. So there's about a dozen of these style funds, split share funds on the Canadian market. The two biggest providers are, of course, Brompton and Quadravest. So you have them all here. You have Dividend 15 Split Corp, which is the biggest split share fund on the Canadian market. You have North American Financial 15 Split Corp. These are from Quadravest. You know, they make up a big chunk here. Dividend Growth Split Corp, that's a Brompton split fund. Life and Bank is also Brompton. So we'll check out a few of these in detail together because, you know, if a fund holds other funds, well, you have to kind of look at the funds inside, the stocks inside to see what you're actually investing in. So the way I like to think about this ETF is kind of an all-in-one split share fund preferred share solution in a very convenient ETF format. So really, really cool. I love all-in-one solutions, you know, very simple. You just need one. You have access to all of them. You don't have to pick and choose, just like you don't have to pick and choose stocks, right? You don't have to pick and choose which preferred split share fund shares you want to buy. You don't have to worry about that. It's all actively managed by Brompton, a expert when it comes to split share funds. And I did confirm with them that this is really going to be an actively managed fund. It's not an index style or anything that's set in stone. But what I'm noticing here, my observation is that the big funds, the bigger the fund is in terms of AUM, it seems like it has a bigger percentage of the fund, which is good in my opinion, but it's not always going to be, you know, they told me it is actively managed. So I just want to make sure that's clear. So let's check out maybe the top 5 or 6, which kind of makes up most of the fund if you really look at it. So let's start with, you know, let's just go in order. We'll look at this one here, Dividend Growth, LBS, which is Life and Bank Financial Split. So these are mostly financials based. So let's just check them out together real quick. So the first one, Dividend 15 Split Corp, this actually makes almost 15% of the fund. It would be this split share fund here. And I just want to give you an idea to do this real quick to show you what kind of stocks these split share funds actually hold. You'll realize very quickly, as we will see, they're very solid big cap blue chip stocks, mostly the financials in Canada and the US. So here's Dividend 15. You have the list of the core holdings here. You'll recognize pretty much most of the stocks. Big 6 Canadian banks and Bell is there. Some insurance companies, pipeline companies like Enbridge, insurance companies like Manulife and Sun Life. TELUS is there. So very, very solid 15 of the top blue chip dividend companies in Canada. FFN is purely financials. You have 15 financial stocks in the US and in Canada. So again, 6 banks are there, insurance companies, some big banks in the US are also there. Really the ones you want to see, right? JP Morgan, of course, Goldman Sachs, Wells Fargo, Bank of America. So that, you know, these two are literally the first two positions, which make up pretty much around 25% or so. But let's just keep going down the list here. So the third one is Dividend Growth. This is actually from Brompton. So this is their biggest split share fund in terms of assets. 724 million here. So this portfolio, like the description says, large cap portfolio, primarily Canadian equities with high dividend growth rates. So if you click on portfolio, you'll see just a mishmash of top quality blue chip, mostly dividend paying companies in Canada. So again, the 6 banks are there, but you got some pipelines, Dollarama, insurance companies, Loblaws in there. So it's, the theme, let's just keep going down the list here. LBS, this is the next one, which is equal weight of the big six Canadian banks and 4 life insurance companies. So IE Financial, Great-West Life, Sun Life, Manulife are the 4 insurance companies. And then you have the big 6 banks. You have FTN next on the list. That one would be this one here. Also sizable chunk here, 10%. 15 of the best, again, very similar to FFN actually. Solid financial companies, 5 in the US, 10 in Canada. You have Brompton Split Bank Corp, which is literally the big 6 Canadian banks. And one thing I found curious, I went down the list. I'm like, well, what are these? I've never heard of these. Partner Value Split Corp. It turns out, and I actually learned something new, that here it is right here, Partners Value Split Corp. It's actually associated with Brookfield Asset Management. So you could be all about it, but the way I look at these ones here, think of it kind of like the preferred shares of BAM. Or, you know, I guess technically that's probably not 100% accurate, but I guess it's a way you could look at it, you know. So these are preferred shares of Brookfield Asset Management, a very solid, big company. So what's the theme here, everyone? Basically, you're getting access to many of the biggest, safest, blue chip, boring dividend companies everywhere in Canada and even in the United States, with a big chunk going to the financials. And of course, we're talking about split share fund preferred shares, which is kind of a more conservative way to get access to these stocks compared to owning them individually, right? So SPLT, everyone, think of it like an all-in-one solution for the Brompton, for a split share fund preferred shares. You don't have to pick and choose. Brompton does that. So there's a lot of great advantages and convenience when it comes to these all-in-one ETFs. So let's look at the details here. So as you could see, this ETF actually got an official low risk rating, which makes sense. Management fee is only 50 basis points, so a very competitive management fee. And although we won't know what the MER is because we need to wait a year for this ETF, Brompton did confirm that the MER will probably hover around the 0.6 mark. So it's not going to be very high at all. So, you know, what does Brompton say that this ETF is designed for? Of course, I'm going to give my personal opinion later on, but looking to receive dividend income while preserving capital, looking for exposure to preferred shares of split share corporations, able to accept some variability of return. So this is an awesome way, and you see the risk rating here. So awesome way of owning the major split share fund preferred shares on the Canadian market in a very convenient way. This is a great replacement or alternative, I would say, to CPD, the iShares S&P TSX Canadian Preferred Share Index ETF. This, you know, very big BlackRock ETF that has almost $1 billion in assets. You know, if we compare it, you see that let's see here. First of all, the MER is 50, so the MER is maybe going to be slightly under SPLT, but you see here that the risk indicator is medium compared to the low risk rating that SPLT has. When it comes to the distribution yield, it's under 6, whereas SPLT is a little over 6, and the big difference is really the performance. So if you click on why invest here, you have a really nice document that kind of, you know, summarizes SPLT for who it's designed for, etc. We already kind of looked over, but they have these very interesting charts here. So they actually compare some of the Brompton split share fund preferreds. You see here LCS, LBS, DGS, SBC, PR, and they actually compare it to the S&P TSX Preferred Share Index. Sounds familiar? It's basically this index that this ETF is following. And what they show is very interesting, that, you know, over the last 10 years, the split share fund preferreds are really outperforming by far that index. You have the also here the returns. So not only do they have higher returns, this is the returns chart, but they actually have lower volatility than, you know, US high yield bonds, than the Canadian corporate preferred share. So in short, everyone, this is a really great replacement or alternative to someone who's looking for something a little bit more conservative than equities. Typically they go to preferred shares. It's you know, you could really think of it like a fixed income style investment. And remember that these are going to be, you know, preferred shares typically give eligible dividends in Canada. Well, so does the split share fund preferred share. So a lot of advantages with SPLT. Let's talk about now who I personally think this ETF is designed for. And of course, you could always go on Brompton's website. They have a lot of great documentation here when it comes to this article is really good too here when it comes to split share fund preferred shares, in case you want to read up on them a little bit more. All right, everyone. So for who is this ETF designed for? Why would you invest in SPLT? What are the major advantages? Well, personally, I think this is a perfect and great alternative to GICs, bonds, fixed income like preferred shares in Canada. I think it's very unique investment vehicle. And now you don't even have to pick and choose which split share fund preferred to invest in. You could just invest in this ETF. You have access to all of them. You will have tax efficient yield, eligible dividends. Remember, not interest income. actively managed by Brompton, someone I trust, who is a split share fund expert. You have diversification across different split share fund providers, so you have lower risk, lower volatility, not that you had much to begin with, than owning them individually. You don't have to worry about the retraction dates, the maturity dates, handing back in your shares. Should you do it, should you not? It's all handled by Brompton. They will take the best decision for us, if it's worth it or not. And it's an ETF. You could just buy and sell it like a regular ETF. So for me, it's really a no-brainer when it comes to safety, parking cash, short term, or even just having a little bit in here as an emergency fund or safety fund. In my opinion, this is where I would put it. So I hope you learned a lot from this video and you know what split share fund preferred shares are. Check out the links in the video description. I'll put some more links there for education. And guess what? If you have any more questions, let me know in the comment section below, because Brompton advised me they are available to come on the channel, do a Q&A, and talk all about split share fund preferred shares and this ETF. See you next time. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the ultimate DIY investing package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and US stock markets. And the good news is you'll only ever have to buy it once, because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and PASSIV referral links below. So Questrade is the broker that I personally use, and PASSIV is the broker companion tool or companion or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And PASSIV, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of PASSIV is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members, where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram, where you could follow us, or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.